And you know that sound. That means we are live here on our YouTube channel, Tackle Trading's Halftime Report, Thursday, 7/9/2020, in a light news week in the market, but actually a pretty interesting day in terms of price action on the charts. We're going to break it all down. Next week's going to be much more fascinating, in my personal opinion, as earnings season gets kicked up and going. We got a couple of precursors to that out of Walgreens, Bed Bath & Beyond, and Levi's. I'm going to get Mark's take on earnings and what he's anticipating for this earnings season, if anything different from the last season and all that kind of stuff. We've got a full crew here today. We've got Cody producing. We got Matt and Mark doing analysis, and I am here as your host, Tim Justice. Welcome out to Tackle Trading. Couple quick things before we get up and running and rolling. If you are new to our channel, click that subscribe button, click the bell, come back and join us each and every day. If you're new to our community in the last month or two, welcome out to Team Tackle. We're definitely appreciative of anybody who joins us over here. Love doing this show on a daily basis. And if you're one of my veterans, hashtag Team Tackle in the chat. Let's get our official hashtag out there and let's start having some fun here today. Matty, how you doing, sir?
You know, I'm doing good, Tim. I'm excited to be here on the halftime report and hanging out with the crew today.
Absolutely. And Marky, interesting day in the market in so many different ways. First thing, are you loving these markets, Mark? They're complex in some ways. Some people could argue they're simple in terms of different types of analysis. What do you love about the market? What do you hate about these market conditions?
It's freaking interesting as can be. Like, I don't know, like boring markets are boring. I mean, that doesn't mean they're not the easiest. And for like somebody new, easy markets can be fascinating. I think these are the greatest markets ever right now. I think there are clear themes that emerge. For example, when there's bad COVID headlines, tech goes up, the big name techs goes up because they're a store of value. Your stay-at-home stocks like Peloton go up and your distressed industries go down. Easy theme. And so during these COVID stretches of news, and there have been a lot of COVID headlines over the last 7 days, they've been massive. What have you seen do great? Microsoft, Apple, Amazon, the store of value, companies like Peloton, companies like Fastly, companies that have been in this strong uptrend. What have you seen do crappy? Your airlines, your banks, your restaurants, your oil. The themes that have emerged over the last 3 months, the betting patterns that you've seen, pretty consistent. Love this market. Now, things change all the time, but this theme, pretty easy to see on the price action over the last week and a half with COVID increased headlines.
One thing that every trader does look for patterns and relationships in terms of just events, data, whether it's earnings, whether it's economic reports, whether it's technical patterns and all that kind of stuff. And we look for probabilities to set themselves up. One thing I've got to get your take on here today, Mark, is obviously jobless claims came out. And for the better part of the last, I would say 3 months, actually, since the bottom there, the markets have been buying up jobless claim data, whether it was good, bad, indifferent, whatever interpretation or spin you wanted to have on it, for many different reasons. The assumption is it doesn't matter right now. It's getting better than what it was last week, all that kind of stuff. Job numbers came in for the week, 31 million. Think about that. We're still getting 1.31 million jobs lost this last week for unemployment claims. That was much lower than the forecast mark at 1.37 and lower than last week at 1.41. Now, on the face, when I read that instant data, I'm like, okay, it came in better than expected. The market would want to probably buy that up. What was your read on the market's reaction to jobs here today? What can we learn from the data? What can we learn from the market response from it?
The market just got dwarfed with too many other news headlines. A lot of times when jobless claims comes out on a Thursday morning, there's nothing else, right? Mm-hmm. There's nothing else. And so the market can focus on it. I mean, there just were too many other headlines out there drowning out the noise. Listen, the claims are still crappy. Still, to put it in perspective, today's jobless claims number outside of the COVID stretch is the highest number in the history of jobless claims. Here we are, months and months and months into COVID. The unemployment situation is really, really dark. I don't care what the White House, I don't care what the unemployment report says on the monthly. You have a lot of people. Walgreens announced 4,000 more people. Harley Davis announced cutting 13% of its workforce. You are seeing corporation after corporation. And watch for that theme to be one of the themes this earnings season. These companies coming out like Walgreens did, announcing their earnings and saying, hey, we're about to lay out 4,000 people. Watch for that theme to be constant. That's a heavy weight if companies are going to start announcing that there are tons and tons of layoffs to come.
Mm-hmm.
That will be a theme to watch to see if it develops this earnings season, because that's the theme that sent us on the second leg lower in 2008, 2009 crash.
Mm-hmm.
Right?
Yeah, the earnings reactions are going to be fascinating to watch, and I do want to look at Walgreens and Bed Bath and Beyond here in just a minute. Look at some of those price actions. I want to get Matt's take on the job numbers though, and kind of some of the economics behind it. I mean, Mark makes a great point. Even at 1.31, better than forecast, better than last week, all that kind of stuff. We're still got terrible numbers. I mean, there's no way to slice that. The highest numbers that we've seen probably ever, I believe these are records still. Matt, do you think the market at some point is going to wake up and start caring about stuff like this?
You know, I've long held the belief from an economic perspective, a lot of these economic reports they're obviously important in the moment. There's no doubt about that. But when you're talking about this V-shaped, U-shaped, W-shaped economic recoveries, I've never bought into the V-shaped economic recovery. And what you're seeing in the data here, in my opinion, supports more of a U-shaped economic recovery, which means if you are going to see that double dip recession in the third, maybe the fourth quarter of this year, you're seeing that data here, right? You're seeing positives and you're seeing negatives. The positives, initial claims are lower this week than they were last week. They're lower than the expectation, and the acceleration of the labor market has obviously dissipated to a certain extent. The negative, we still had 1.3 million initial claims this week, which in a vacuum, that number in and of itself dwarfs whatever the record numbers of the 1980s were. And so you're still seeing a very big separation between what we're seeing in the labor market with initial claims and unemployment and whatnot versus what you're seeing on the monthly report. And you know, you cannot, here's the problem I have from an economic perspective. You cannot look at the initial claims over the last 2 months and look at the unemployment report over the last 2 months and say these are accurate numbers, right? You cannot have as many initial claims as we continually have over the course of the last 2 months and see the labor numbers in the last 2 months actually decrease, which means there's something vastly wrong with the labor market, especially on that monthly unemployment report. Are we tracking it? One of the factors that I think we need to figure out is, are we tracking contractors who got furloughed or laid off in the initial claims report, but we're not tracking them in the unemployment report? Are we tracking furloughed people as people that are participating in the labor movement in the monthly report, but they're still getting initial claims on the job report? There is something vastly wrong with the labor numbers right now. And the truth is probably somewhere in the middle, that the initial claims, maybe it might be being manipulated a little bit with contractors going in to, taking advantage of that $600 a month. You might have, there's something wrong within the numbers. Regardless of whether you're looking at the unemployment situation or whether you're looking at the initial claims, having 13% unemployment and having millions upon millions upon millions of people getting unemployment, that's not a rosy picture for the labor department. And the biggest concern that I have with initial claims specifically is, yes, the acceleration of the labor is decreasing, but also is the recovery. As you started seeing the economy reopening up theme really start to play out, it was on the backs really of this report we're looking at right now. When you started seeing from a technical perspective, take a look at industrial here. when you started seeing that economy reopening up theme here just start to really play out. It was really in mid-May, it really started playing out in industrials. When you're looking at energy, really kind of that mid-May. When you're looking at any of these distressed areas of the market, you really had that mid-May type launch. Well, where did you have that initial claims? You had that initial claims in early May, in early March, April. You started seeing that just drive up, up, and up and up. But then coming into May, what did you see in this report? And again, it was supported with the economies reopening up. People are going back to work. You know, we could have that V-shaped recovery. And look at this initial V-shape here on the initial claims. It is just dramatically going down every single week. And so if you'll recall, every Thursday, we were looking at this report and we we're saying, yeah, you know, 5 million initial claims. That is just an historic number, but it's not as bad as the 6.5 million the previous week. And then the following week, it's like, okay, you know, we got 4.2 million initial claims, but it's not nearly as bad as 5.5 million initial claims. And every week that number was just getting slaughtered on initial claims. So even though it was a very devastating number, when you just look at the number, you could understand the bullish argument at that point saying, well, yes, the number's terrible, but we're going through a worldwide pandemic. And obviously the economic response is going to be dramatic in real time. But look at it contracting, coming back down, literally week after week. 5 million to 4 million to 3 million to 2.5 million to 2 million to 1.8 million to 1.5 million. And now you're really flatlining over the last 4 weeks. And so even though the expectation this week was 1.37 million and it came in at 1.31 million versus last week of 1.4 million, you're not seeing that V-shaped recovery that Kudlow talks about in his Baghdad Bob type routine he comes out once a week on. You're seeing it kind of flatline, which doesn't support that V-shaped economic recovery. And so it's really kind of, I'm seeing this. I can understand some people taking it as a positive. Overall, I think it's fairly negative for the market long term, though. This data just does not support a V-shaped recovery, in my opinion.
You know, whenever we get any jobs data, I always go look at some of those numbers, Matt, that you've been bringing up over the last few months as significant, like the employment population ratios, the participation rates. All of this stuff just seems like the markets are ignoring it right now. They don't really care. But I'm looking at some of these numbers, guys. They're the worst we've seen in like forever, like literally for decades and decades and decades and decades.
When you're looking at the labor market in general, right? Laymen, they'll come in and they'll look at the unemployment report on a monthly basis, and they'll just look at the number and they'll say, oh, 13% is better than 15%, or 7% is better than 8%, or whatever the case might be. We've seen this for a decade now, right? They just focus on the number. They don't focus on what is behind that number. In the unemployment report, you have multiple different economic numbers that actually play a significant role. But when you're trying to take a look at the entire labor market itself, it's not just initial claims. It's not just the unemployment report itself. You also have to look at participation rate, right? The participation rate's at the lowest it's ever been. The lowest it's ever been. Even before, think about this, guys, even before women were allowed. Think about what I just said. Even before women were allowed in the workforce, it is that devastating of a participation rate right now. So yeah, the labor market, it's vastly negative. It's vastly negative. The market doesn't care about it nearly as much as it probably should, because they have believed in this V-shaped recovery, but this V-shaped recovery is done. I honestly don't even get why Kudlow, well, yeah, I do. It's propaganda, but I don't even understand where Kudlow even makes the argument for a V-shaped recovery economically any longer. I mean, there's more data pointing to a W-shaped double dip recession than there is any type of V-shaped recovery. People who believe in that V-shaped recovery economically, that it's a pie in the sky at this point. It's not happening.
Yeah. Yeah, back on the charts here if we can. I do want to break down some other things that are happening. Obviously, the technical reaction to this is very interesting in my personal opinion. It's not like a devastating day or anything like that, but anytime you've got a new candle, it can update technical information the way we're reading it. The S&P, Matt, is trying to hold that little breakout range on the intraday, where the Dow and the Russell, quite frankly, are looking much weaker, and the Nasdaq's looking much stronger. Same themes we've always seen. Give me a quick flash through on the charts, Matt. Tell me anything that you're seeing there.
Yeah, and it's same thing that we're seeing. I mean, obviously a down day, everybody's going to get spooked. I mean, one red down day, let's call the plunge PPP, and let's get the plunge protection team out there doing their job. Come on, Mnuchin. But really, honestly, you came down, you tested your breakout channel again, you dipped underneath that 9 EMA very quickly, recovered extremely quickly coming underneath that 9 EMA, you know, tried to kiss off 3,100, but still holding the breakout channel. I'm taking today's price action very similar to what I said yesterday. Give me some consolidation, hold your channels, and we're going to have some really good breakout candidates coming into the into next week. And I'm taking that for what I'm taking today's action to support that argument until we break those support levels in the S&P 500. And you know, I read all the headlines this morning, Tim. Markets down, markets tanking, markets this, markets that, and I'm like, let's take a look at the NASDAQ real quick. let's see what tanking really looks like. You know, not the natural gas. That's a different beast in and of itself. But the NASDAQ, oh wait, it's a doji. Okay, that's the new market tanking day. That's the new limit down. The new limit down is if the NASDAQ doesn't go up. That's the new limit down.
You know, Mark, I want to get you in on this one because we were talking actually early this morning, you know, over coffee, and what we were talking about this. There's this obvious new assumption that prices don't matter, value doesn't matter around some of these big tech names. In fact, they're being addressed as the store of value right now. In fact, you've even heard some arguments that valuations can be just thrown out the window. What's your read here with tech? I mean, just this relative strength and weakness discussion between sectors, stocks, and components right now, Marky?
I just listen. Whenever you have COVID-19 headlines, and this goes back for a long time now, tech, and especially the big names in tech, not necessarily semiconductors, but the big names in tech, money flows to. It is one of those signaling things. COVID headlines, we go to Apple, we go to Microsoft, we go to Netflix, we go to Amazon, we go to Shopify, and that has just been a consistent thing for months and months and months now. I am starting to hear people literally make the argument that old valuation models should be thrown out the window. We live in a new age, it's a new time, and that we should just be accepting of much higher valuation levels as the new norm. Sounds like justification to me, but we'll see if it sticks. I didn't think that the market could convince people to say, hey, 2022, 2023 earnings, let's buy today based on those numbers. I was wrong. So this market wants to spin higher, and they are looking for any justification, any excuse to justify higher and higher prices, particularly in the big popular names that have been popular the last couple of months. They'll probably succeed. Now, does this all end in a horrific crashing bubble? It might. But that bubble might not burst for another month, another year, another decade. I don't know. I do know when trends are powerful, you keep trading them.
Well,
no
here's
matter
the
how
good
crazy
thing.
it may be.
If you do call for a crash, you can be like one of these gurus on social media that whenever it does happen, you can claim victory, Mark. So just say
I'm gonna do that right now.
I mean, at some point in the future.
Yep. Eventually, at some point in the future, it could be this year, it could be 10 years from now, it could be 30 years from now. At some point, this market will go down. And at that point, I will say that I called it.
Yep.
That's what they always do.
Yeah, the gurus need to get the hell out of here. Gurus are
really
done. If there's one thing that I hope all America has learned in this environment, you don't need a guru to tell you what to do in this environment.
Nope.
Listen,
get out of here, gurus.
I've unfollowed several just in the last week, Matt. You know,
this is and this is one thing you'll never hear any of those charlatan and frauds say. They'll never say, yeah, this thing could end badly. Yeah, no kidding. This thing screams bubble, right? They don't tell you and teach you technical analysis and trading with the momentum and keeping proper. Trade with it. Trade with it. Don't just because it's a bubble or because it's crazy say I'm going to make money, and certainly don't short it. You know, be responsible, identify patterns, trade those patterns. Never guess when these kind of trends end, because yeah, that you should just quit trading if you are going to be like, well, I think it's going to end now. No, technical analysis rules your decision-making process. That will make you a lot of money over your lifetime.
Well, I want to get a technical read on something from Matt then here. I mean, just within the same theme of stock pickers market, different areas doing it strong and weak. Look at XLE here today, Matt, and energy stocks. I mean, you talked about the strength in tech. We just flashed you Apple, Microsoft, Amazon, all those names looking great in an uptrend. Doji today, even on a red day on the broad markets. You look at energy, guys, we're down 4% today. Breaking support, and there's nothing really down there. I know there's some support left of the chart right around this 34.50 mark, but I mean, come on, we're now below moving averages. We're showing weakness. We're showing pressure. Could we see this market even exacerbate this theme even more, where you literally have downtrends in some sectors and uptrends in others for a prolonged period of time? Maddie, what are your thoughts on energy and that general question right there?
Well, this market is quickly becoming, the looking in the mirror to a certain extent with what the economic situation is in America. When you look at the economic situation in America, pre-pandemic, post-pandemic, you have the haves and you have the have-nots. You have 1% of the population that controls the vast majority of all the supply of money in our economic system. And the markets are starting to reflect that, where you literally have a very small portion of the markets. I mean, we're looking at this markets and you see the headlines on the markets and you see people on social media and Twitter, I got rich, 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 blah, 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 right? But you really see it, and in mainstream media, markets up, markets up, markets up, CNBC, markets up, markets up, markets up. And it's like, okay, that's fantastic. But let's remove Apple, Microsoft, Amazon from the equation. Let's just remove those ones. Let's let the growth of the Spotifys and the Shopifys, the FSLYs of the bunch. Let's let them go. Let's just remove those four stocks from the equation. This market has a vastly different picture. You literally are at this point. You are the most top-heavy market that this market has ever seen, and I don't see that changing anytime soon. I don't see people saying, well, I'm kind of sick of my Apple investment, so we made too much money there. Let's go buy an energy stock, or let's pull some money off the table on Amazon and let's go buy Duke Energy or Southern Energy or what other any other utility company, or let's move outside of the NASDAQ and let's go buy consumer staples right here with a lot of retail stores in consumer staples. So, you're seeing this massive rotation from certain sectors, those distressed areas of the market, the economy opening up plays that have not been supported with economic reports recently. We just talked about initial claims at some degree of length. I don't see investors making that decision anytime soon. Do you guys? Let me rotate from aggressive, call it whatever you want. Call it the storage of value if you want, because Apple has billions and billions of dollars in cash reserves. But I don't see anybody here saying, let me take money off the table in those tech plays and let me go buy a distressed area of the market right now.
No, I don't see anybody either. I mean, in fact, we talked about Buffett yesterday holding on to Apple while he's dumping his airlines, right? I mean, I don't think anybody's really doing that yet, Matt. And I don't see where somebody would in the short term.
I think the only way, and I'm not a huge fan of Apple at these prices, but valuation doesn't matter anymore. So whatever. The only way, though, I see money moving out of Apple is one of two scenarios. One, you have this broad market crash, and that doesn't necessarily mean money's moving out of Apple per se. It's moving out of everywhere because the broad market crash. Okay. So, but the only other thing I see moving out of Apple is if you actually get the economy reopening again and COVID worries dissipate, and then people look to diversify and feel more comfortable and see more returns. in some of those beat up stocks. If they actually are like confident in hey, things are going to get back together. There's a lot of cheap stocks, and then moving some money out there, taking profits from one, moving that. But I mean, outside of that, people are just going to be like, I don't care. Valuation doesn't matter. I mean, would you be surprised to see Apple at $500 by the end of the year at this rate?
I wouldn't be surprised to see Apple at $500 by the end of the third quarter.
Like, I mean, because it doesn't matter. Nothing matters anymore. And people are scared, but they still want to own something. I mean, Tim, you tell me that all the time. You always remind me, people like owning things.
They do. They want to buy something. They want to hold on to something. They want to have their favorite companies or whatever it might be as a part of their portfolios, especially as longer term holdings. And many investors, I mean, they don't want to be in cash all the time, guys. They got to own something. So when you're looking at your statement, you're looking up and down the list of the companies that you've got capital in and you're keeping track of them. Are you going to feel better about holding on to an Apple with gains, or getting into an American Airlines that is literally, dumping jobs on a weekly basis, might go bankrupt, kind of thing? I get why people are holding on to the strength and the companies that they believe in, because there's uncertainty in the world right now. And if you're going to have money in one of the vehicles, why not a company that you believe in, a blue chip that's in a beautiful trend that you've made money on over time? I get it, because most investors, Mark, they don't go to cash completely, right? They'll move a little bit in, a little bit out. They'll temper their portfolio back and forth as market prices adjust. But it wouldn't surprise me if Apple holds their trend here. Not at all. But the earnings season is a big wild card, in my opinion.
Okay, that's what I wanted to bring up, because we are entering earnings season next week, and I do believe this previous quarter, in the first quarter reporting season that happened in April and May of this year, I do believe a lot of companies got a pass in that environment for really, really porous earnings. And what we were talking about back then was, companies are going to get a pass right now. These earnings numbers are going to be devastating, but are they going to get the same pass as the economy starts reopening up in the second quarter? That's the question you have. And so with a lot of these distressed areas of the market, I don't think they're going to get a pass, especially given the COVID data is getting pretty nasty out there with total cases, hospitalizations, those types of things. There's many states that are questioning the reopening. The CDC just put out some fairly stringent guidelines on schools opening up back in the fall. The COVID data is putting, certain other areas like NFL football at risk. I know for the NFL fans out there, that's blasphemous, but come on, in the back of your mind, NFL fans, aren't you a little worried the NFL doesn't play this year?
Matt, if you go to Pro Football Talk, which is a very popular site on NFL, and you go to the comments, vast majority of fans do not think the NFL season's happening this year, at least as measured by comments on Pro Football Talk message board. I was actually very surprised to see the thumbs up, thumbs down metrics across the board there. So
it would be fascinating to see the demographic of NFL fans that don't think that the NFL is going to play football this year, but still are preaching that the economy should be opening up. I would like to do a deep dive on that demographic, because I think you would find some very, very interesting data there. But just in the back of your mind, everybody's questioning this a little bit. And so in terms of that second quarter earnings that is starting to happen next week, are these distressed areas of the market going to get that same pass, given the fact that now we're starting to be concerned about a double dip type situation coming into the fall, coming into the winter months? Are they going to get a pass? But also, I mean, outside of those distressed areas, one thing that could really put a little bit of cold water into this Apple trend, the Amazon trend, the Spotify trend, these high flying blue chip companies, the pandemic plays, the stay at home plays. And I get it, Mark, valuation doesn't matter right now, but is it going to matter on an earnings number when they don't come in nearly as what we need to support any type of valuation? I'm a little hesitant coming into this earnings season with some of these high flyers, guys.
No, you should be. The last couple of days, because last earnings season, we talked here on the halftime report a lot that it didn't matter what a company's earnings were. In fact, I was, flagrantly throwing naked puts after identifying the betting pattern that didn't matter how bad it was. Companies weren't going down.
You were
more
throwing
than a
naked
couple
puts
percent.
on pre-earnings plays, Mark.
Oh no, yeah. Before earnings, I was like, oh yeah. I mean, this market does not care about earnings.
Okay,
this quarter.
and in a normal condition, you would be heavily critical of somebody doing that.
Yeah. Well, the thing about it is, if you think it doesn't matter this time, you are going to be in for a rude awakening, at least according to the earning. So while earnings season officially kicks off next week, we got some companies with earnings this week, giving you a little flavor and taste of what the appetite is out there. You did not have hardly any companies go down more than 10% on earnings last time. It was a rarity if something went down 3 or 4%. Just didn't happen.
No, we looked at the heat map.
Oh, devastating earnings side doji, Mark.
Yeah, no, it just didn't matter. Just in the last couple of days, Levi down 10%, Walgreens today down 10%. What's Bed Bath and Beyond down 22%? Yeah, no free passes this quarter. I think it is a very clear sign that if you are cavalier about earnings, this is a huge warning sign. What is happening the last 24 hours with earnings. And if you're cavalier and like, I don't need protection and I can just do it. Yeah, well, one of your holdings might get woke up and you get a big slap to the face. So treat this earnings season like you would any other earnings season. The free pass time is probably over now.
Now, a couple of these companies didn't really have terrible, reports in their earnings.
They had terrible reports last quarter too, and it didn't matter.
No, I get that.
How many times last quarter did I say this is what we've been seeing? Devastating numbers, losses galore, -$3 per share, -$4 per share, getting absolutely destroyed. I mean, being like, but the market doesn't care about it right now. It just doesn't care about it right now. Bed Bath and Beyond, just this quarter, just yesterday, comes in and says, okay, we lost $1.96 per share on EPS numbers. Our expectation was a loss of $1.42. So we missed by about 25% on our earnings numbers. We actually came in line with $1.3 billion, and revenue year over year fell by 49.2%. That earnings report is a very, very, very similar earnings report to many retail companies like Bed Bath & Beyond that we had last quarter, and yet they all dojied. Not a lot of them actually went down in price. This time, Bed Bath & Beyond down 24%. I think that is a small indicator, and it is just Bed Bath & Beyond. We're not talking Apple here, but that is a small indicator that you should put into your back of your mind that it's early, right? Earnings season really has not even began. It begins really kind of next week with the financial companies, and Nike and all that. But it is a small indication that earnings might have a little bit more of a the investor class is willing to punish these companies a little bit more this quarter, 3 months after all the data we've had, than we were in the previous quarter. I'm a little bit more hesitant coming into this quarter than I was last quarter. I think this is going to be a very important quarter for these trends, especially if the distressed area of the market is going to rotate. We need to see something vastly different in earnings than what we saw in Bed Bath & Beyond today.
And just by the way, if you're new, earnings season does start next week. Companies can report their earnings on any given day in the year, but most companies actually report on the quarterly cycle. January, April, July, and October are the busiest seasons. And here next week, we got a bunch of companies here coming out, guys. Alcoa, I know they did some pre-reporting, but they have their official report next week. Johnson & Johnson, JP Morgan, United Health, Netflix, Bank of America, PepsiCo, Abbott Labs, Citigroup, a lot of big names, guys, so we are going to be kicking that off.
Well, and realize Bed Bath & Beyond's report was not for the previous 3 months. This was their first quarter report, but just because it's happening, 2.5 months after earnings season, after the previous earnings season, this report, if they would have reported during the actual earnings season, it would not be down 24% right now, guys. It would not be down that much. It was a different environment. Companies were be given a pass, given the fact that we just shut down the economy, that everything was crazy, and everybody was like, yes, we understand that things are really, really, really weird right now. But now they report today, it's a different market. Companies, so Mark, when we talk about valuation doesn't matter, It matters to 98% of the market right now.
Oh,
It matters
it
to
doesn't matter if
98%
you're
of the market.
hot. If
It doesn't matter to the momentum traders
yeah,
of Amazon, Apple, Spotify. But I just want to make sure everybody's clear on my opinion here. Valuation absolutely does matter long term. Absolutely. And I promise you, regardless of the economic, the fundamental, the behavioral condition, in 2007, early 2008, people were saying valuation doesn't matter. In 98 through 99, people were saying valuation doesn't matter. Before 87, valuation doesn't matter. Before the 1970s, valuation doesn't matter. That's the type of mentality that happens. And I understand people will come up, but yeah, but this time's different because we're going through this unprecedented situation. Well, guys, that's what progress and evolution is. It's always a new unprecedented situation. There will be things that happen in the future that are unprecedented that we don't understand, that in the short term markets will lose their mind and do whatever they want. But to sit there and say Amazon, to make the argument that Amazon, which I am a massive fan of Amazon, but to make that argument that a valuation of over that has a PE ratio that is in the triple digits right now, that it doesn't matter, that's going to have an impact long term. I do not believe that the pandemic has changed the traditional economics and behavioral analysis that has been dominant for centuries, for absolute centuries. This is a short-term situation, in my opinion, where the Fed has supported this stock market with so much money, and that money comes into the big names.
Yeah, for sure. And the thing about it is this type of thinking is very dangerous for new investors, new traders out
Are
there.
we
who
really
try
going to say
learn the
Amazon's
markets.
going to double every 6 months?
No.
why not? Hey,
Are we
listen,
really going to say
Of course
Apple's
it is,
gonna,
Matt.
not?
What are you saying? Of course it is. Duh.
So in 4 months, like nobody's going to be surprised if Amazon's a $3.7 trillion company. Like nobody.
Hey,
Like
why not?
at no point it matters.
Got to justify higher prices, man.
It's crazy.
Well, you got to justify higher prices when you're the dude buying an out of money call option.
So it's all good, dude.
Dude, people are pounding their chest out there right now because of the extraordinary volatility and some of the biggest moves in the history of the market over the course of a 2-3 month period, about how, value doesn't matter and you can always make money and stocks only go up and all that kind of stuff. Just veterans, I know maybe we're the old fuddy-duddies here and I don't care, but veterans, we just know it's not sustainable over the course of a lifetime, obviously.
I maintain what I've said during this entire pandemic, outside of that 2.5 week stretch where we had the economy reopening up thing. You trade the momentum to the top side. You still keep valuation in your long-term view from an investment perspective. You're looking at buying the blue chip companies right now, and valuation does not matter in the short term right now to those companies like Amazon and Apple and Google and Facebook and Spotify and Zoom and so on and so forth. But from an investment perspective, I still think you got to concern yourself with value. Mm-hmm. A company making money. Oh my, we say value. A company having profitability is still important. And I know that is like crazy train to say in 2020, that a company making money is still important. But to me, call me the old fogey of the bunch, companies making money is still important from an investment perspective.
But wait, I mean, Nikola, I saw some kid crowing online about how he made 200 grand on Nikola out of the money calls, Matt, and got rich, and they don't make any money. So maybe I should just go be just a bad gambler. He literally, Market Watch, shame on you, Market Watch, by the way. And I don't want to go off on this forever. They published an article that literally is it's not journalism at all. You want to talk about sensationalism? People complain about CNN and Fox News and all this kind of stuff. Sensationalism in the financial news media in the last 3 months has gone off the rails and off the charts. And the bad headlines and the bad journalism is worse than I have ever seen it in my 15-year career. They published an article of some kid claiming he made all this money on Nikola and Tesla and this and that without vetting it, without proving it, just because he pulled the information from a Reddit thread, Matt. And then this article gets shared across social media, and new traders and investors like, holy cow, you can make all these big gains and you can just play out of the money calls and this and that. And it's just
there's only one day where you could have bought an out of the money call option and did the type of gains that guy claims he made with volatility at 200% on those options. Okay. He had to buy that call option right here. And call me skeptical. I don't believe it. I don't believe it. Sorry. I don't believe that you turned in a couple $1,000s into $200,000 by buying out of the money call options on Nikola with 200% implied volatility. Sorry, I don't believe it.
But here's the thing. Let's say he did.
Literally, you could have bought that day, and if you held this day, you've given up a lot of that just because volatility came out. So if he did it, fantastic. Golf clap. I'm happy for him. I like when people make money. I'm not a hater. I like when people, Main Street America, make money. But that can't be sustained. It's like I told Cody earlier. This is like people at a casino. The casino just needs to keep on feeding drinks. That's it. They'll give that money back.
I'd add one thing to that, Matt.
What's up, Noah?
Congratulations. Now let me see you do it again.
Right.
Yeah. Yeah. Good luck with that.
Do it again. If you can do it again, now maybe you're on to something. But otherwise, you just got lucky.
It's funny. Market Watch shares that thing. I read an article this morning from this Navy medic down in San Diego. Turned $1 million into $7,000 in this stretch. So
that's also believable.
Like, like people hear about these people making money.
That's far more believable than buying out of the money call options.
And they want to gamble. Like, and they're not happy with 2% a month. They're not happy shooting for 3% a month. They want it all, and they want it all today.
When talking about options, what did Lawrence McMillan say was the second most important concept in trading options? Do you guys remember?
Volatility, wasn't it?
Volatility.
Yeah.
Right. And buying out of the money call options with implied volatility of 200%, if it worked, great for him, but it will not work over time. No way.
Kill you.
The casino will get that money. Just keep on feeding those drinks. And what those drinks are, Tim, are market watch headlines saying, oh my goodness, get rich quick, get rich quick, get rich quick. They give that back. And every time I hear stories like this, guys, I just think of my good friend Dubber, who basically turned 5,000 into 150,000 buying out of the money call options on earnings plays 3 consecutive times. And I remember Coach Frank myself telling him, pay down your debt, take off the money, remove the risk from the exposure. He thought it was that easy. He kept doing it. He ended up never trading again.
You bring up implied volatility, and it made me think about the option Greeks. If you're out there and you are a subscriber to our channel, one little tip I would give everybody out there, if you want to learn a little bit about the Greeks, Coach Noah did a video series. It's in our playlist. You can find it if you know how to navigate the playlist on the option Greeks. Learn about Vega, because Theta, Vega, they are critical if you're going to be a successful option trader. Matt, if you click that playlist, and I believe that probably is.
I thought we had one down here. I'm still trying to figure out how YouTube actually works with all these playlists.
If you click the actual word playlist up there, I think it'll show you everything. Like right there.
Where are those Greeks?
And then it's about, on my screen, it's
right
there.
Right here.
Yep.
What are we trying to find? Oh, there.
Yeah, the option Greeks. And these are wonderful videos on breaking down what those option Greeks are. You can get a free guide to the option Greeks. Sometimes I forget all the quality content we actually have. I totally spaced out that Noah did this, but it's really is.
I don't know how you would forget a video series that awesome.
They were great.
That is true. That's on me, Noah.
They're kind of fun.
You, Noah. They were really good. So if you've not seen,
all right, homework assignment for tackle trading. Watch Noah's video series on the Greeks. Even if you're the veteran, it's a good review. Watch the video series on the Greeks, because as an option trader, a lot of times we get so caught up in delta and theta, because delta and theta select the time frame, select the strike price in the option contract. And for those of you who are new, in an option contract, you have 2 clauses: the amount of time you want to buy or sell in an option contract, and the strike price, the price you want to control that asset at. And so sometimes, as we get so fixated on the almighties of delta and theta, we forget how important Vega is. Vega, as the Bible of options, Lawrence McMillan states, is the second most important Greek. So go out there, review these videos, review the Greeks. And for those of you who are new, it is a really, really, really good basic level introduction to what the Greeks are, how they help determine the price of an option.
And Adam makes a great point. Guarantee his videos are better than reading options as a strategic
Adam.
Hey, options is a strategic
I wasn't going to say it,
investment.
Adam.
That thing
going to
is
say it.
ether in print. It'll put you to sleep. It's the best sleep aid you will ever put it on your nightstand.
It is War and Peace for.
I'm not going to say a bad
No.
word.
Trading options.
It's a great book, but man, it'll kill you if you're not careful.
I'm not going to say a bad word.
Highly
about the
intelligent book.
McMillan.
Highly intelligent book. But I got to be honest. I've never made it through completely. I've scanned it a ton. I've read a ton of portions of it, but I've never actually made it through the entire book.
It's like the worst college textbook I've ever read. It is
bad.
dry. It's very intelligent, no doubt. And I did make it through, but it was like pulling teeth.
The only thing harder to get through
it's an
than that
important book, and it will absolutely help you understand the options market in general, the Greeks, volatility, everything. It's just a tough read, Lawrence. Just a tough read.
The only thing harder to get through than that book
easier to get through
is a seminar that he puts on teaching options. I remember.
Oh, Tim, I remember that one. I remember.
All right, enough. I don't want to go.
Amazingly, he's more dry in person than he was in the book.
Yeah, for sure.
We got a lot of bashing going on.
I know. We got to move past it.
No more Lawrence McMillan bashing. It's a great book.
Larry, if you're out there watching, we love you. We appreciate you laying the foundation for options education. FXI next, if we can. Mark, you had some updates on China. If we didn't get to them, I want you to bring them up now. What do we know in terms of what's going on in China right now?
All right, so like once again, market doesn't care about China, blah 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 blah. But here's what's happened. A couple little things. Trump administration plans to finalize regulation this week that would bar the U.S. government from buying goods or services from any company that uses products. So we've had these bans on some Chinese companies, but now government will not buy from you if you buy any or use any products from 5 Chinese companies, including Huawei, Hikvision, I'm sure I'm pronouncing that wrong, and 3 other companies. Any company that uses equipment or services in their day-to-day operation will no longer be able to sell to the U.S. government. So expect a retaliatory tit-for-tat measure from China. That has been the standard thing. We do something, they do a tit-for-tat. They do something, we do that. Matching that. Also, Australia announced that it is suspending its extradition treaty with Hong Kong. So once again, I mean, it's the market's just become numb to it. I don't know what would have to happen in China for them to actually care, but you have some escalating things going on China right now, and so it's one more thing on top of surging unemployment, on top of COVID-19. On top of election fears, on top of U-shaped recovery, on top of, what else might go wrong in this situation? You got a lot of things to worry about. China is just one in a long list right now.
Yeah. And obviously, I mean, whenever we're talking global economics, when you bring up China, I also think about the impact it's going to have on commodities globally and things like that. Crude oil next, if we can. Matt does CL contract, because we're looking at energy earlier, and crude actually has been selling off a little bit on this here today, guys. I mean, we're down 2.5% right now. I mean, Matt holding the 20, but now kind of showing the first significant red candle in a couple of weeks here. Matt, what are you seeing in the chart first?
Wake me when the 20 gets broken.
Yeah. Marky, anything from you?
I do not care until that 20 period moving average gets broken. There's been a ton of evidence in this cup and handle formation. Support's been increasing. It's consolidating over the last week. If the 20 gets broken, you have a different technical read on that. Until the 20 period gets broken, you really got to focus on that overall pattern. And the overall pattern is a cup and handle with the potential breakout.
Mark, is this weakness just on the backs of energy stock weakness here today? Is there any specific news on COVID news stuff?
This is COVID driving it down. You had deaths spike the last couple of days, and because the thing about, you had all these cases, right? Cases, but deaths were down. Well, deaths no longer down the last couple days, above their 7-day average by quite a bit. And so that's what, you know, in fact, I wrote about this weekend with oil that, you know, oil's going to be impervious to COVID unless you have an spike in deaths. Oh, you're getting a spike in deaths. But I'm with Matt. I'm not going to try to overanalyze this. Wake me up when it breaks out, or wake me up when I have a much deeper pullback that stabilizes and gives me a reversal signal. It's really, really boring right now in the pattern it's in right now.
Gold next, if we can here, Maddie, as we work through commodities and the currency markets. And I do want to talk stocks. So there's some individual companies I do think are noteworthy today. I do want to get to gold here. A little red candle holding the trend, holding the 1800 breakout. Matt, traders of gold, investors of gold, what should we be watching for here over the next couple of weeks, just to see if the volatility stays consistent, see if we hold trend? What are you going to be watching in the gold markets?
That is such a fascinating question, Tim, and I'm going to give you a fascinating answer. Nothing. I could care less. I could care less about anything that happens on gold. There's, I have maintained this. There's really only one thing. There's only two things that could get me off my gold prediction. A change in monetary policy that could definitely get me off my gold projection, or a change at the CME from a margin requirement. Unless those two things happen, I could care less what happens with gold.
It's beautiful. And by the way, you know, gold is always the first thing people think about. I really enjoyed the conversation we had on the halftime show yesterday about silver as well. And I really think, I want you to look at the silver chart again real quick, if you can. And Matt, give me like a 20-year weekly chart on this one. Do not sleep on gold's little brother here. We calling it little brother, the crazy cousin. What was the name we gave silver yesterday?
I call it little brother, but there's obviously a much more creative name out there in the tackle trading community.
Son.
You know, like we're calling a breakout, you don't cover streaking. That's the one thing that came out of yesterday. But right. I don't think we got a name that's stuck yet.
Tackle trading, we need a new creative nickname for silver. I know tackle trading can come up with it.
Oh, they come up with all the best names.
I'm open to whatever. Let's see what the team comes up with, then we can start having that conversation. But the reason I want you to bring up the weekly chart here, Matt, is the more I look at this product, the more I just get interested in what I'm seeing here from a price perspective. Anywhere in this 19 to 20 range, you know, obviously it's had a nice 4-month run here from the bottoms. We're starting to move higher. I'm watching the price appreciation here. I'm watching whether we test these zones or whatnot. But I got to tell you, I'm very interested to see if silver can trend here. Gold has been trending for a couple of years. Silver's not been trending for a couple of years, and now we're starting to kick off. Matt, I'm excited about this product.
Can we call? See, I'm still caught up on this nickname, Tim. My entire day was thrown off when I read a CNN article earlier today on market, and I just want to say one thing very quickly. I need a petition. I need a national petition going on. This is very, very important for me. This is one of the most important things that is in my life right now. I need CNN off the FinViz News Watch. They are not financial news media. I saw the dumbest headline on CNN I've ever seen today, and that says something. And by the way, I don't hate CNN. I don't. They have a really good mobile version of their website. But CNN, you should stay out of financial news media. They said today, their headline read, quote, market sells on Supreme Court giving basically ruling against Trump on his taxes. Well, they did, but yet they didn't. They sent it back down to the lower court. Most likely Trump's taxes will come out, but they probably will not come out for the election. So for all the Democratic lovers out there, you're probably not getting Trump's taxes by election night. So, but the headline read as market tanks on Trump headline, basically. And then in the body of the actual article, which nobody reads articles these days, and that's why they get away with these dumb headlines, they stated that, well, we don't know if the market takes this as a positive or a negative. So why write the dumb headline? Petition. I don't know who I need to petition to get a petition going in 2020. I've never done a petition. This is my first petition. I need somebody to take the reins to get a petition going to get CNN removed from FinViz from a news financial news perspective. It's absolutely insane. Outside of that, I'm still on this silver thing because that CNN article got me all wound up earlier today.
I like
Can we call it
sidekick.
this Samwise Gamgee of the
I was thinking more
commodity
like
market?
Batman and Robin, but Samwise
Okay,
Gamgee is a good call.
Okay,
Yeah.
Robin, Sam. What about the Chewbacca? Can we call it the Chewbacca? Okay, so Han Solo is gold and Chewie is silver. Can we call it the Chewie of the commodity market?
Yes.
There we go. There we go. What about you guys remember Shrek? What about Shrek being gold and the donkey being silver?
That'll do, donkey. That'll do.
That'll do, donkey.
Does the
That'll
donkey
do,
have a name
donkey.
in Shrek?
Donkey.
Donkey.
Isn't it just
No,
donkey?
it's just donkey. It's just donkey.
It's a
Eddie
great
Murphy,
character.
the great Eddie Murphy. Yeah, the great Eddie Murphy.
That's a
I
nice boulder. I
I
like,
like
that
the
boulder.
sidekick
Can we
idea. I
call
don't.
it? Can we call it the Costanza to Jerry Seinfeld?
It's too long.
Just call it
Doesn't-
George.
no.
Just call it George.
If we go down Seinfeld route, I'm going to go deep Seinfeld, and maybe we'll come up with George's actual nicknames.
Can we
We'll
call
call
it
it T-Bone.
Doctor? Can we call it Dr. Watson to Sherlock Holmes?
Ooh, I like that one.
I like gold sidekick. People can put whatever sidekick they have in their mind in there, but
Oh,
I
I
like
got a good one. I
sidekick.
got a good one. Okay. How about gold being Michael Scott to silver's Dwight Schrute?
No, you love Michael Scott way too much to give him the gold moniker. I don't think so. We need a stronger lead there, I believe, personally.
Oh, I like Misty coming in. The Lone Ranger, Hi Ho Silver. I like that. I like that. That's the only thing I care about today. I care about a petition against FinViz for adding CNN, and I care about what the proper nickname for silver is. Outside of that, I'm pretty bored of the market today.
If you have ideas out there on nicknaming silver, mention Tackle Trading on Twitter, and let Coach Frank kind of compile it. He's going to be here tomorrow. Breakout Frank, and we can see if anybody has any ideas. You can also email team at Tackle Trading and let Mark know.
This is the level of analysis that Team Tackle comes to enjoy at Tackle Trading right
That's
here.
right. Hi-ho
Nicknaming silver.
That's right, dude. I think people got to start paying attention. No doubt.
Oh, Chris, I like that one. Michael Jackson gold. I don't know if we could use Michael Jackson in gold in 2020. I think there's new information there, Chris. Tito,
Yeah.
I like that one. Paul
Tito.
Michael Jordan to the Dennis Rodman. Wouldn't that have to be Scottie Pippen though?
Yeah, it could be Scotty. It could be Scotty. I still haven't seen that doc. All right,
I
guys.
still haven't heard a winner yet.
No, I haven't heard a winner yet either. Nothing's grabbed me. Nothing's grabbed me yet. There's a couple I like, but
I
nothing.
thought the Hi Ho Silver was cute, but I don't know if it has stick.
Yeah, broad appeal. People would know what it is. We'll see. Let's move into company analysis here, guys. The dollar's not doing much. It found support. It's up just a hair, but there's nothing really there. Let's start talking stocks. And by the way, if you're out there watching our show, we do like to have a lot of fun on the show, no doubt about it. And if you do come to our show, I'm sure you do expect some of the banter back and forth and whatnot. Hashtag Team Tackle into chat. One thing I would love everybody to do right now, I think it's great. I love doing this. I appreciate you guys typing in when I ask you for this. Just type in where you at right now. What city, what country, what state, where you at right now. Let's represent Team Tackle. Let everybody out there in the community know what kind of broad audience that we do have. If you've not done it yet, thumbs up, subscribe, click the bell, and let's get into some companies. Some interesting ones here today. I do actually want to start with Boeing if we can. The stock was actually selling earlier. Give me a quick peek at BA, Matt. You know, there's all this news about the implication that the FAA and their probe that we're going to be moving into in terms of getting those 737 Maxes back up and running was going to be a positive. It's not necessarily following through positive. And did we lose you, Matty? Whenever Matt's back, we'll get the chart on it. Mark, Boeing is probably one of the poster childs for the reopening theme and the backup and running theme and all that kind of stuff. What is your read on this chart right now, this stock right now? I did see the stock started to sell a little bit intraday on news. The FAA is actually not so keen on just moving everything forward. There's some negative information coming out intraday I got to dig into, Mark. But are you still interested in Boeing here, or the longer that it stalls, does that get you more interested or less interested, Mark?
Well, I'm not interested in Boeing here because I'm cheap. But I am interested in Boeing at lower levels, in that 120 range is where I'm targeting. Here, the technical charts, it's not a pretty chart. It's not a terribly ugly chart. There's a lot worse charts out there from a bearish perspective. Go look at Valero, go look at Planet Fitness, go look at a lot of different charts. The chart's not particularly ugly compared to some of these other charts. So it has some stickiness to it right now. It's still above the 50, still above the last multi-day support level that formed. It doesn't want to go down compared to some of these other stocks, but it's not a bullish chart either, right? It's not a bullish chart in any stretch of the imagination. So it's very blah from a technical analysis standpoint. Don't have really momentum in either direction. So probably going to take a catalyst to get it going one direction or another, either individual on the stock or broad market based.
Matt, is there anything here in this Boeing chart, the short term, grabbing your attention? Are you wait for quite some time on this? Let it cook, let it develop, see how earnings comes in. I mean, how would you approach a company like this? Because I know you've got opinions about Boeing, obviously takes on Boeing. We talk about this company a lot. What's your read on it right now, Mehdi?
As of right now, I have no interest in any distressed area, economy reopening plays at current price thresholds. I would be interested on some double dip type situation. Mark identifies this support level at 120 that has a double dip type scenario where it forms support here, forms support there again, right at 120. Ultimately, you got that $100 price point. But just with the data we're seeing from an economic perspective, with a lot of these technical formations that were blown out of the water 2 weeks ago, Boeing is held up. There is that positive. It's held up against many of the other, industries and sectors that are in the distressed area. You take a look at industrials here, threatening to violate that support level right there. Boeing threatening to violate that support level. So, no, I don't have any interest as of right now. But I do maintain the belief that in these distressed areas of the market, at some point, there will be a good buy. I just don't believe that point is today. And that's what I said yesterday. I said it the day before, and I'll keep saying it until I, see an opportunity there. I could be wrong, as every trader and investor, constantly can be wrong. But as of right now, I just don't see the data to support these distressed areas of the market.
Tesla back in the news here today as well. Next one here for me, Maddie. Elon Musk, obviously he has visions about what he wants to do with his technology, not just with automated cars and without driving, people in them and whatnot, fully autonomous cars. I finally got that out there. He actually projects within the next couple of years, we're going to have no steering wheels in his cars, no brake pedals in the cars, and that humans will not even have the ability to control the car. And he's calling this level 5 of the autonomous kind of wave as we're going up and into it. Matt, would you pop in a car without the ability to turn the wheel?
I've seen Minority Report. No way in hell I'm going to get in that car.
No, I thought the exact same movie.
That's
Literally,
where I
Tom
went
Cruise,
to.
Minority Report. I've seen how that ends. No, I'd have no interest. But then again, I do have a level of paranoia that most people don't have too. So
Kids will. It's going to be interesting watching how tech evolves. It's a story that kind of just reminds you why the fanboys around Elon are the fanboys and they're never going away. The stock has made an incredible move up. By the way, they also had another price target upgrade. Morgan Stanley's Adam Jonas raised his Tesla target to 740, Matt. He's still holding out. And he says this is just based on the power of hope right now. The valuations are out of crazy. And he expects that stock to get cut, by $600, I guess. I mean,
okay.
you got both sides of this thing, obviously, at all times.
That this entire market is built on hope. You could say that about any company in the entire market right now. Just put hope in the analysis and you'd be right.
Hey, all I know is I don't know. Listen, I'm proponent trade with a thing. There are many, many bubble metrics out there that when you look back 3-4 years from now and you look back at 2020, you could say, yeah, we should have saw that. Come on, let me give you a little stat, get your commentary on it. There are more stocks that trade above 10-time revenues today, that their stock price is at least 10 times higher than the revenues, 37, than there were in March of 2000 at the height of the bubble, in which there were only 30. How's that for a bubble statistic for you?
That's pretty incredible, actually. So there are more companies that are in extreme bubbles than even in, did you say the tech bubble?
As measured by their stocks that trade above 10-time revenues today. 37 today, there were 30 at the height of the bubble.
Yeah. There's no doubt it's a bubble, but how long that bubble lasts, I guess you got to just keep reading the chart in that regard. But yeah, there's a lot of really troubling statistics, Mark. I read the S&P's forward PE ratio relative to historical norms, and it's just going to make you shake your head. The further you dig into valuation metrics and fundamentals, it obviously gets you concerned, but that's not what the market's
And you know what I do? And you know what? I recognize that we might be in a bubble. This thing might crash. You know what I'm going to do the next time I see a high base formation? I'm going to trade it to the bullish side, you know, because I'm not going to guess when the bubble is going to end. Now, my investing, that's a whole different story. But my trading, don't try to guess. We're probably in a bubble, but it could last 8 more years for all I know. What you going to do? Sit on your hands?
Sure. Yeah.
Yeah. The analysis on Tesla is pretty easy here, guys. You buy breakouts. That's what you do. And you just, yeah, you question the fundamentals. You question the valuation. I get that, but the trend's pretty clear here. You buy breakouts, correct, guys?
Yeah, absolutely.
Yes. Listen,
Okay.
I think this company is the most overvalued company in this entire stock market.
Nicola, let me introduce you to Nicola.
Okay, Nicola, it's a whole different weird thing. Like, but if you get a high base,
Let me introduce you to Zoom.
I mean, go look at that Fastly high base. If you see this on Tesla or Apple or Microsoft, I don't care what it is. When you see that nice 3, 4, 5, 6, 7, 8 day trade sideways, let the moving averages catch up, clear resistance level, you got to play those breakouts. Those breakouts in this particular market are one of the best patterns you'll ever trade. If you can't trade that to the upside, you should just become a credit guy or an iron condor person or a whatever else it is.
Yeah, probably not an iron condor person in this this type of marketplace. But you know, coming back to the Tesla again, I do think the analysis is pretty easy here. You buy breakouts, you let them get overextended, you wait for them to consolidate, you buy the next breakout here. Tesla, you know, overextended in anybody's fascination. I don't care what the analysis is. Look at relative strength, look at the potential average yield, look at historical trend lines. This momentum and the separation you're seeing here on Tesla is euphoric, crazy, insane, but it's also, you know, legit in terms of its trend and pattern. You have momentum coming into it, you have consolidation at the top, and that leads to take Tesla away from the equation. Let's remove the price threshold over here from the equation. And let's just look at this on a blank chart here. You have a bullish uptrend with increasing momentum forming a consolidation high base pattern that absolutely has to be traded to the top side.
Mm-hmm. Yeah.
It has to be.
Yeah.
You can't come with any other technical projection here. You can question the fundamentals, you can question the behaviors, you can question the earnings, but you can't question the price action here. Increasing momentum in a bullish uptrend, consolidation, high base leads to a breakout.
And you don't need a lot of history to really reaffirm that here, even just with Tesla. You had a high base breakout at 800. You had a high base breakout at 900. You had the high base breakout at 1,000. You know, you're seeing these little breakouts happen even in the last few months, and you're seeing the momentum take off. I love the analysis there, guys. I want to get Mark's take on another one here. Just a couple more here from me, guys. Nvidia next, Mark, and really not news on this one today.
Very quickly, before we do move on from Tesla, it does need a little bit of time to cook here.
Cook for sure.
Right. Yeah. Give me another 2 days coming into the weekend. You know, you consolidate today, the rest of the day, tomorrow. We're going to have a lengthy conversation on Tesla in the scouting report meeting, guys.
No, I mean, if you want to be really conservative on this, look at the last 2 breakouts to sustain on Tesla. They both required the moving averages to catch up, both the 9 and the 20. And so, like, when you look at both breakouts, those moving averages that caught up, acted as support, and then provided a base in which the breakout could occur. If you want to be real conservative, wait for the pattern that happened the last 2 times on Tesla.
Mm-hmm. Mm-hmm. It's got to cook one way or the other.
Got to cook one way or another.
One way or the other's got to cook. Nvidia next here, Matt. I thought this was noteworthy because, you know, being a veteran trader, I don't think this has ever happened before. Nvidia now just top market cap over Intel, Mark. I know chip makers and chip stocks are something you love. Intel's not done well, guys. Intel traditionally kind of one of those stores of value, dividend paying company, very consistent, bigger behemoth in the space. And yet Nvidia has just been a juggernaut here, now bigger than Intel in terms of market cap. Mark, what's your read on chip stocks in general? Number one, do you still think the momentum in Nvidia is beautiful, obviously going on there? What specifically, if you have any insight on Intel, I'd love to hear it, because I know the semiconductors are an area that you really do pay attention to.
Yeah, Nvidia is the one chip stock that over this time period, this COVID-19 crisis, everyone's loved. Their graphic chips, their gaming chips. It's provided, you know, a lot of excitement. Well, I mean, one thing that's very common to the NASDAQ as a whole, very common to Tesla. What do Nvidia and Tesla have in common during this stretch? Neither have fallen below their 20-day moving average. It's been really, really strong on the momentum side, as Tesla has been. There are certain stocks out there that are just relentless, like almost nothing I've ever seen. Nvidia is one of them. Intel's like the old boring grandpa, right? Doesn't have a lot to offer of excitement. Steady Eddie in Intel. You know, a lot of people are saying, you know, hey, the future is AMD, the future is Nvidia, going to continue to strive and take market share from Intel. And there's nothing sexy about Intel. And if you don't have something sexy about you in this marketplace, you're probably in a range or in a downtrend. If you got something sexy about you and someone can make a case that one day, because remember, valuation doesn't matter today, but one day you're going to dominate the space. Nvidia can make that theoretical case, even if valuation today is really, really, really stretched. It's sexy. It's hot. That's all it takes to send it to these levels.
By the way, still not the biggest stock in semiconductor space. Taiwan Semiconductor still has that reign here at 298 billion in size.
Well, they own the foundries,
right?
You know, so
right.
They own the foundries. So
AMD, by the way, pressing a multi-month breakout. Matt, one of your favorite stocks in terms of the history of the market. You back that out to weekly. It needs some time here. You got earnings in a little bit, but I think we might be very interested in this company over the next several months if you can pop above that 60 zone.
You want to play that breakout. Wouldn't you agree, everyone?
You want to be patient. You want to be patient here. Wait for AMD breakout.
Only got one more here, Maddie, for me. Then we'll do final thoughts and go into Coach's Corner, and that is Netflix. You know, we were talking the other day about those bad analyst calls on Levi's. I don't think it's up there to that scale, but I read a report from a Bank of America analyst here today that said that Netflix and Amazon should come in and buy these bankrupt movie theaters. And I just literally had to just shake my head. And maybe I'm wrong. Maybe there's something there. My original reaction was the whole point is that they're online. Why would Netflix need a movie theater to be able to put out The Irishman? Like, you don't have to do it. Even if you just get a licensing agreement with AMC, you could publish The Irishman. Like,
that's fine. But if there was a time, wouldn't it now be that time?
Yeah, I actually think it's a brilliant suggestion. Like, if you think about it,
doesn't this feel a little bit like Amazon destroying all brick and mortar and then 3 years ago coming in and starting to buy all brick and mortar?
Yeah, no, I think it's a brilliant suggestion. It's the branding, right? You go
like
and it's Netflix.
It feels like to me like buying Blockbuster just when it was going bankrupt because it's cheap. You get all the titles and stuff. I just don't see.
Yeah, but okay, hold on. Do you really think people are never going to go to theaters again?
Sure. Yeah. I'm sure they will. I'm sure they'll go back, but the trends are moving away from.
You got to take a moment to have a little bit of a mea culpa here on your Blockbuster analogy.
I disagree. Well, maybe not the Blockbuster thing, but here's the thing. Over the next 10 years, you'll see less people in theaters than at home. I watch more content online at home than I did 10 or 15 years ago.
That allows Netflix to corner and have a monopoly on entertainment.
I like the idea. I think it's really brilliant from
that is a baller move. That's a Jeff Bezos move, bro. You're wrong on this one, dude.
Yeah, I like it a lot. You know,
See, Tim was so excited to come in with
I
his take
disagree.
on
I
Blockbuster.
disagree.
Listen,
He thought about this
Cinemark-
all morning long. He's like, I can't wait to talk to Matt and Mark about this. Tim, this is one of those moments you should have brought this topic up during the pre-production show.
No, I still disagree. 100%.
Listen, Cinemark, their CEO came out over the last week or so, and he was given a state of the industry and state of the company type speech. And he was talking about how they can make money under their business model at around 25% capacity of their movie theaters. That is a staggering low number. You
Think
know,
of the margin Netflix can actually make if they were selling $10 popcorn.
I mean, one of the
Come
reasons AMC that's having problems with bankruptcy, it has nothing to do with movie theaters. They're a poorly run company. Their balance sheet coming into this was a disaster. There are good companies. Cinemark is by far in a much healthier position. If Netflix can pick up some stuff, the kind of finance, I think it would be brilliant.
What's the last
love the
movie you
idea.
boys went to in
What?
person? What was the last movie you went to in person?
Ford versus Ferrari.
Okay.
Right
It was
before
okay. I
COVID
watched
struck.
that on the plane. Yeah. I enjoyed it. So, okay. That was what, a year ago?
No, it was, dude, it was like 4
Well, it came
months
out a
ago.
year ago.
It was
Yeah.
like-
You might have went to it late. Matt, what about you?
I am not the demographic to ask this question to.
Uh-huh,
I don't
uh-huh.
listen. I get it.
You went to
I'm
Bad
not-
Boys because Emily drug you out to Bad Boys, right? It's still the number
That
one.
was probably the last one I went to, and as Coach M can attest, she had to supply some liquid encouragement to get me to go out to Bad Boys.
Team
that
Tackle.
night, 'cause I
Team
wanted to
Tackle.
know-
In the chat, what was the last movie you went to in person? I want to see the names. I want to see how many of these rabid movie theater goers are going seeing all the new releases. Guys, we know the trends are changing. I get it. It's a cheap, distressed industry.
Yes,
You
the
come in
trends
and
are changing. There's no doubt about that.
Dude,
But
this
if you
is not
don't- If you
retail
don't think
now.
owning AMC doesn't help Netflix on distribution, you're wrong.
They don't need it.
No, Netflix doesn't need it if they just want to maintain. You're absolutely right. Amazon didn't need to buy, Whole Foods. They didn't need it. But you know what? After years and years of depressed price action, they saw a value opportunity. After what we've seen with the pandemic, I don't believe movie theaters are going to go out of business. And if they do, I believe somebody else will buy them up and continue to.
They
There's
absolutely
too much
need
money
it.
to make. Disney Plus does not make $1 billion on Mulan if they launch it on Disney Plus.
If
They
Disney
make $1
bought a
billion.
theater,
Hold
I
on.
would
I
understand
let
more.
you go on. They make $1 billion if they release it worldwide in movie theaters. AMC is not just a U.S. operation. There are movie theaters around the entire world. Disney does not make the money they make without theaters. They just don't do it. Not in any capacity. So to me, coming in, cornering a market that allows you to have free reign on content creation and distribution rights on a depressed, you don't do this type of deal at the top of the market with AMC's market cap where it was even 6 months ago. But now with AMC begging for $200 million, Netflix could come in with pennies on the dollar. Netflix could come in what they pay their comedians to put on, shows on Netflix. They could come in with Dave Chappelle money and buy AMC at this point.
It's a
Dude,
fair
think
point.
about like entertainment be associated with your brand name. Like, I mean, you know what I saw a ton of ads out for yesterday? NBC's new Peacock. Everybody's trying to start a streaming service to get away from, Netflix has
It's
a ton
the
of
baller
competition.
move, Mark. It's
I
when
think it's a baller
everybody's
move.
trying to catch up to Netflix and Netflix saying, yeah, we own this. Now we're going to go buy AMC. It's the baller move.
I
It's
think it would
Jeff
be a great
Bezos
move.
It would even make more
Absolutely.
sense for me for Disney to do this. It does not make sense for me to Netflix do it. It
If
might
it makes sense for
ball-
Disney, then it makes sense for Netflix.
Disney's in the business of-
Irishman, you don't think the Irishman, if wide release, coupled that with the Netflix release, doesn't have more exposure?
Bro, they could already do that. People have been begging them to release their videos
You're right.
like that.
But
wide
how
release
much
for a long
money do
time.
they have to pay for those distribution rights?
They'd probably get paid for it, quite frankly.
They would not get paid for it. They would have to pay to get that exposure. now by buying a distressed company at pennies on the dollar, they can now control that. Yeah, if I was the CEO
In the
of
5
Netflix,
minutes
I'd
we've
look
been
at it.
talking about Netflix, all Netflix does is go down in price. We should probably stop talking about it for all Netflix bulls out there.
All right, let me know out there,
No.
Team Tackle.
Netflix, give me that retrace. I'll talk long enough to give me a retracement back down to 475. Let's do
Buy
this.
all those theaters.
Simple
I love
question.
the
I
idea.
want Team Tackle. I want to know out there. Should Netflix buy a movie theater? Yes, no, don't care. In the chat, let me know one way or the
Listen.
other.
A year ago, you would have to pay 4 times more than you would have to pay today for AMC Netflix. 2 years ago, you would have to pay about 8 times more than what you would have to pay today. AMC is literally begging for money. Netflix could come in with pennies on the dollar. It would not impact Netflix's business operations. It would not impact their bottom line that much. They would not have to spend that much money to get all that distribution. I think I wish I was the guy that thought about this. Finally, an analysis that I'm like, that actually makes a little bit of sense.
Dude, this is a very split thing.
It's the same thing.
Yes, no's.
It's honestly the same thing. I think Amazon should buy JCPenney solely for distributions.
Sure. I mean, yeah, I can understand that part of it though, because they actually do sell physical products. They need to move
and just think about this, Mark. Just think about this. Post-pandemic, all of us been pent up for a year. You're damn right I'm going to a movie, Tim. In fact, I might go to a movie just out of spite with your hatred of movie theaters right now.
I mean, listen, why
Un-American?
Maybe Spotify should buy
Un-American is
Live Nation. Maybe Spotify should buy Live
Bro,
Nation.
you are so stupid. I don't even know how to like quantify stupidity at this moment. Oh,
How is it not a very similar type of scenario, Mark? Live Nation puts on live concerts and all that kind of stuff. Spotify could then own the music
Spotify doesn't
distribution rights
create its own original content.
All right,
Netflix does. There is your.
That's not true anymore. They just bought the rights to the Joe Rogan podcast. They're signing all kinds of original content they're going to put on there. We'll leave that for another time. I enjoyed the discussion. Looks like there is a split out there. I'd have to tally it up, Matt. We can both claim victory on this one. I'm sure you don't.
I'm going to a movie today.
Go to a movie. All right, bro.
They're not
of course,
open here in Salt Lake.
I would criticize anybody for going to a movie today. That's why they should buy AMC for next year. My analysis on AMC is simple. AMC might go away, but I don't believe movie theaters are going away. I just don't believe that. I don't believe date night with the wife going to a nice little movie is going away.
If movie
I don't
theaters
think
go,
kids, there is a certain thing about watching a movie. It's an experience of watching a movie that you simply do not get by watching it on Netflix. I don't think that's going
It's
away.
not a good look. You
I
don't
have
need an
not
innovative
one-
company to move backwards.
dude, I have not one, not two, but 3 naked puts on Cinemark right now. If they take away movie theaters and they go under, then uncreative men have no fallback pattern to date night. What are we supposed to do?
CNK,
Dinner and a
I think-
movie. It's the easy. We don't have to
CNK.
think. We don't have to think. Like,
I get you, bro.
dude, movies are not going away. You just
Dinner
are
and
not
starting.
going
movies
away.
when you're dating, bro. It is not like the longer you get into that relationship of yours, you'll be less dinner and a movie. You'll be more Netflix and chill.
If your
I promise
analysis
you,
is very
Netflix-
simply
And then
this, movie theaters are not going away, then Netflix buying AMC makes some fundamental sense for Netflix.
Dude,
Hey, they are
I-
cheap. At least you're getting a good deal. I get that.
Literally,
part.
what is Netflix's budget on a yearly basis for content creation?
They don't need the theater to distribute their movies. Period.
No,
they just
but
don't.
do they get more visibility? Do they get more growth in that environment? And do they have more revenue streams coming into them if they do get that? And do they have more negotiating power with the likes of Amazon, with the likes of Disney, with the likes of, MGM, with the likes of Universal, if they do have the distribution of all all entertainment content. Think about the monopoly they could really kind of drive in that capacity. And currently AMC is begging for money with a market cap of 466 million. They could come in with petty cash and buy all of AMC with petty cash. They have spent in comedians in the previous 1 year more money than it would take to literally acquire all the distribution under AMC.
Dude, I feel like the
I'm
old
sorry.
USO days whenever Matt
This
would
is
say
like
something
buying
about,
2 shares of Spotify in this market condition. What are we talking about?
dude, like when Matt was like when we were disagreeing about USO, every time he brought it up, I'd sell a naked put. That's how I feel about Cinemark right now. Listen, like movies aren't going away. Cinemark's
so
a great company.
I
It's
got
really
it.
well run.
So your opinion's biased based on a trade that you're in. I got you.
It's biased based on yes. Oh my gosh, seriously, I'm gonna do it
We're
again.
not going to continue this.
I'm gonna go over leverage myself on this.
We are
Listen,
punting.
Yeah, you could have watched The Irishman in a movie theater on an IMAX screen versus on your, stay-at-home TV. I'm willing to bet you would have thought about it.
No, bro, I don't need the theater. I enjoy it just fine. It's fun going to the theater and getting a burger before whatever it is once in a while. But the world is changing. And quite frankly, I think Netflix is much more concerned about international growth in countries all over the world
Which
than they are about
AMC
owning theaters
allows
in the
that to
US.
happen. Distributions allow that to happen. Negotiations with Universal, MGM, Disney, and other content providers in this space allows those negotiations to happen. It allows Netflix so much more ammunition in negotiations to get their primary core business into those other countries you talk about. And again, we're not talking about a multi-billion-dollar merger here. That's not what we're talking about. AMC's market cap is literally 4 shares of Tesla right now. This is a cheap risk for Netflix. This makes a lot of sense.
risk, yo.
What's another $500 million in debt to a company that literally corners the market in debt?
I got to get a hold of Reed Hastings from Netflix and see what he says about this. He's the CEO. We'll
He
see.
never
if
says
he's
anything
interested.
smart. Why would you need to get a hold of Reed Hastings?
I need to figure out if he's interested.
Reed Hastings is a
the other.
genius who shouldn't talk a lot.
Yeah, he's obviously built a juggernaut here. There's no question about it. What is Netflix's market cap?
It's like
Far
230
higher
or
than
so.
AMC's.
Well, AMC is less than $1 billion, right? 400 million right now.
455 million. Netflix market cap is,
It's like 230 or something.
yeah, I'm going to get you the exact figure.
225 billion.
Yeah.
They're a mega cap company at
225.
this point. Yeah. Well, one way or the other, we're punting. We'll talk about it on the podcast. I'm actually now interested. My brain is now
Man, I
going
had
to
no
what big
clue I
companies
was going
should
to come
buy.
in pro theater today.
Yeah, who knew?
Oh.
Who knew? I was actually just bringing it up last second as an off shot. And by the
Well,
way, it is still split
mean-
in the chat. By the way, Team Tackle is not 100% on board with you on this one. It is split.
Okay, give me 30 minutes to really review this merger that you threw in my face today, and I promise you I can convince more of Team Tackle to get on.
Let's do it on the
board.
podcast. Let's do it on the podcast. Let's have a discussion about distressed companies that could be targets of big companies that would make sense. You know, we're talking because this is going to be a market we're in. I mean, Buffett came in and bought some oil, what was it, natural gas equipment from Dominion last week. You're going to have all these distressed companies that are cheap, Mark. I'm sure some of the bigger names are going to want to try to acquire some assets in these markets as this thing continues to split and change. So there's some interesting thoughts there. Interesting thoughts. Let's get into final thoughts here. Matt, you first.
Tim makes me want to buy AMC.
Dude, no, don't buy Cinemark. AMC is a crappy run company. Cinemark's not.
All right,
So-
but Tim's hatred of AMC.
His
makes me
whole
wanna buy
argument was
AMC.
to buy AMC though.
Oh, that's why you can buy it. That's why that's why Netflix can buy it, is because they need the cash.
Right.
Cinemark don't need your Netflix cash.
Do we
No.
really think a poorly ran company under AMC is going to be a poorly ran company under Netflix?
Well, I don't know how good. I've never really dived in because I've never been a Netflix investor, so I've never dived in to tell you if I believe in their CEO or their management team. So I don't have an opinion, but that would be fun,
All you got to look at, Mark, is that trend.
Well, that don't tell me anything about their
Oh, well,
management.
yes, it does. That's a
No,
10-year
it
trend.
doesn't.
We're not talking about 6 months of data here.
Dude,
We're not talking about a
And what
Momo
did they build
stock
that
that's
strength
a
on?
pandemic play here. We're talking about a company that went from $7 to $500 in the last market cycle.
What did they build that on? On the back.
You don't have a 10-year trend like this when you're a poorly ran company.
Dude,
That's
that's
right.
not a
They're-
great trend. I mean, prices are up. What's not up in 10 years? We got a Fed inflated market. Give me a trend.
You're right, Mark. It is up, but it's not. But when the market's up 400% and this is up like 5,000%, I think you can say Netflix is here to stay. I don't think that's a tough choice.
Oh yeah.
Netflix being here to stay is obvious. Netflix will be around from now to the end of time. I mean, but that doesn't, to me, tell me I believe in their management team. Like, what decisions are they making? All that.
All I'm saying, you are talking about a company that destroyed other industries. You're talking about a company that took on the social conscious of everything that became Netflix and chill. You're talking about a company that is a lexicon within the social environment. You're talking about a company that has destroyed its competition that everybody else, including Disney and Amazon, has tried to catch up with. You're talking about a company that has literally reshaped how we see and excuse me, how we see it, how we digest entertainment.
Yeah,
This is not a Momo pandemic play that is a high flyer for 3 months because it caught the momentum of the market in a euphoric condition. This is a company that has had massive price appreciation over a 10-year stretch.
Dude, you're also looking at a company that had, before the pandemic, downtrending subscriber numbers in the US for 2 straight quarters. So
okay, you're right, 2 straight quarters in which is the first downtrend, and it was only minimal in a stretch that had growth that was averaging 50% subscriber growth over 10 years.
Well, and they also have massive expansion internationally during those 2 quarters. Those were mixed reports. I watch every one of Netflix's quarterly earnings reports. Yeah, Netflix is a great company. We're not debating Netflix right now.
Netflix is a very, very well-ran company.
Oh, of course. Yeah, there's no question about it. I mean, look at that trend as well, momentum there. Mark, final thought from you, sir.
Not a whole lot different, right, than the last 4 or 5 when you've asked me that question. There's companies that traders out there love right now. There's trends out there that stand out from the rest. Find the patterns on there. Find patterns that develop on there. For pro members, we help you identify those in the scouting report. And find out what your risk tolerance is to trade. Now, mine's always minimal, 1 or 2 trades out. Some people have a higher risk tolerance, but focus on those areas. And for you bears out there, I mean, there's some pretty charts for bears that have developed this week. COVID-19 thing's probably real. And this thing, as long as the headlines keep what it is, you know, those stocks are going to continue to produce nice trend setups to the downward. It's a nice bull and bear market right now with the 2 distinct groups right now.
Mm-hmm. Buy AMC, huh, Matt? Buy Cinemark. Is that where?
I'm gonna tell you, somehow, Mark, like your anti-AMC stance got me wanting to buy AMC so bad my teeth hurt. And Mark's anti-Netflix stance makes me just crave more than anything for a high base at $500. I want both of them. I want both of them.
You want it all. You want it all. Noah, what about you, sir? Final thoughts from you?
Oh, I've got my eye on a few stocks out there for the bull side. I like the looks of Lulu. I like the looks of Garmin right now. Both have nice little breakout settings for the bulls. And then for the bears, I'm still watching that energy sector just in general, looking for picks.
Yeah.
But I don't know. I kind of like the whole Netflix idea. I didn't really chime in too much on that, but
You're with Matt. Of course you are. I know
it's a
you
smart move. It's a smart move.
Of course you are. Get back to the theater. Buy them cheap.
They could
I get
always
it. All
sell
right,
it after people start
okay,
going back. They could just buy low, sell high. They could flip it really if they did it right. So
that's not a bad idea.
Yeah.
Flip it around. Yeah, for sure. Many picks on the option and stock report over the weekend, guys. If you're a pro member, go back and review those. We are going to be updating those each and every week. We got our meeting tomorrow. Going to be looking forward to it. Just one chart actually that grabbed my attention. Pretty popular company, Roku. Matt, if you want to just take one last peek at Roku for me, I would appreciate it. And just nice little breakout here, guys. Momentum play is running into some old stuff back there. But we've got a developing trend here, a company that I've had on my radar for a long time, was untradeable there for a few months. It's going to be back on my watch list. Let it develop here over the next month or two for patterns, but definitely interested in that upward
It's too
move.
bad Roku couldn't wait a couple of days before breaking out, because that would have made our scouting reports most likely. So
Definitely would. All right, guys, like, subscribe, come join our pro community. Coach Gino will be teaching the Cash Flow Club tonight. If you did not watch last night's webinar with Coach Greg Holmes, it is on YouTube on the playlist. Go check it out. And remember, the homework assignment you have is to go back and find those option Greek playlists. In fact, I've got the link directly to it. I'm just going to leave it in the chat for you guys. Go and review the videos that Noah did about a year and a half ago. They're fantastic. They're just wonderfully done on option Greeks. Learn about Vega, Theta, Gamma, Delta, all of them, and get that PDF that was built as well. A lot of great stuff going on at Tackle Trading out there. If anybody ever needs anything, if you're a pro member, you want to reach out to us, team at Tackle Trading. Mark handles all of the customer service stuff there. We do appreciate you guys. Let us know how we can help you. And tackletrading.com. Yeah.
Very quickly, just special thanks to all the new Bear Market Survival Guide members, the new Cash Flow Condor members, the new Step System members. Big shout out. Welcome to the new Tackle 25 covered call members. Obviously, we have mastermind groups, and we have a lot of new members in our systems with the holiday special we ran over the last week. If you still, we're working to get things in place to move forward with Tackle Trading. I'm sure if you email Mark at team at Tackle Trading, he'll still take care of you guys. But our pricing did go back to the original pricing as of now. But again, we'll still take care of you. If you're one of those late showers, just email Mark at team at Tackle Trading, and we'll get you hooked up.
So if you miss the window, just buzz Mark an email. Is that right, Maddie? For the next day or so. Yep, that'd be great. All right, guys, we are out for today. We'll be back tomorrow. Looking forward to having Coach Frank in there. And Frank, as always, that's a fun Friday, fun day. We got a lot to figure out here today, guys. We still got to figure out Silver's, nickname. We'll see if anybody tweets at Frank and lets us know. We'll see everybody tomorrow.